Hello everyone, and we're now live. All right. So today we're going to have a look at support resistance analysis. So our in our recent stream we were coding a trading bot that was more focused, on high and lows of the previous session, and today we want to go deeper like into actual support resistances, and so maybe a bit of quick painting, right? So it is very easy to represent support resistance, visually when you look at the chart, right? So you have some patterns, some consolidation, and then of course you would mark, your ranges like this. So you first call it support resistance, and then after that breakout, you want to see if we can identify these breakouts and if there are like any opportunities. So this is the the idea, and the difficult part is of course to represent it in code. So I actually wanted to create a Jupyter notebook using support resistance analysis, and for that I'm still going to use the German stock index actually. So so German stock index is actually one of my favorite, or we can also try to use some US index. So how about we try the Dow Jones instead? Hello Martin, nice to have you in the stream. So yeah, let's just import the historical OHLC data. So from ATJ Algo Trading dot backtester, let's import get OHLC history. So this is a common thing already. And again, it seems like, yeah, guys, can you check if the interconnection issue is fine, if you can hear me properly, and if the video quality is good enough? Just want to make sure that the internet connection is stable now. So if you could please confirm that for me. But I assume it should be fine. So I just wanted to make sure. So let's get the OHLC history. So I'm going to copy a very quick code blocks that I need. Oh yeah, okay, right. Thank you, Martin. Thank you for confirming. So that's great. Okay, so again, let's try to work with M15 timeframes. For some reason, I feel like if you go to like M1 or M5, the scalping becomes like too active, and then it's very difficult to beat the commissions. So when it comes to like intraday trading, in my opinion, it's just one setup per day that is like feasible for me, right? So the trade has to last several hours, and if the trade lasts less than 1 hour or 15 minutes, most of the time it just doesn't work in the backtest simply due to commissions. So that's why, as you can see, I'm more inclined to use the M15 chart. And let's export data for the past 3 years. So we can do datetime dot now minus time delta, and let's do days is equal to 365 times 3. So we are now running a backtest for past 3 years, and now let's see. Okay, maybe we don't have enough. Oh, and of course, stupid me. We have to initialize the platform. That's why I'm not getting any data. So mt5.initialize. Okay, so let's now display the data. So this is our OHLC data frame. Let's try a 3-year window. Unfortunately, we don't have enough data. Yeah, that's also annoying. So maybe we should also look at our data feed providers, to have long history. But when it comes to like intraday strategies, for me 2 years is more than enough, because I believe that for intraday trading, the markets tend to adapt and change a lot. So something that happened 5 or 10 years ago is not very relevant for me when it comes to intraday trading. So this is just my personal opinion. Of course, we have to test it. But when it comes to like swing trading, you trade on D1 charts. Then, for example, using a time frame of 10 years sounds actually appropriate to me. Okay, so now we have the open, high, low, close, and let's also show our figure, right? So let's have a look at the OHLC data on the chart. And I will also need to import create price fig from our package, and also we will need to import display, or maybe it's already imported. Let's try. Oh, all right, yeah, I added an indicator here. Hello Jack, nice to have you on stream. Okay, so now we have the M15 data, so this is great. So the idea behind breakouts, right? We usually have a consolidation. So for example, by the way guys, I'm using an app called Epic Pen. It's like a free tool, and like this is what it looks like, and it's actually pretty neat, yeah, because you can like draw with it, so it's kind of cool, or make lines. So but here, so for example, I think we need to scroll a bit deeper, right? So actually let's zoom in a little bit more. So here, yeah, we can see a very nice consolidation here. And yeah, our job is to try to identify with Python. So for example, Oops. I only have the free version, so unfortunately, I still have to, learn to work with this application. Um, but eventually I'll get there. Okay, let's try to have a look at this one. So we can see, a very interesting, support here. For example, that the price here has been touched once, twice, and you could consider this candle. And so if we take this pen and like draw a line here, then this would be, a potential support. So basically what that means is that, how do we find this, right? So we can use like support and resistances for breakouts trading or like reversals. So if you see 1, 2 touches, then maybe you could have another touch here and it would go like into a long position. Or if like price would break out from that, we could look for a short opportunity. And like there are many methods to do it. And I was thinking maybe we could create like a level identification and see, how close other prices are close to that level. And so basically, pardon. So basically, if you remember, we compute something like a high-low indicator. So I would start with that, right? So we always like start working with the maximum and minimums. So let's try to, start with highs and lows. Okay, so how do we compute highs and lows? A high and low is like very easy, and we have to compute that high and low, for a specific period, right? So in our, DAX breakout board, we always use the previous session, but now I'm gonna use a high and low, for a specific time interval. So what I'm going to do is I'm going to investigate the highs and lows for past, let's say 24 hours. Let's start with 24 hours and then we can see how we can improve on that. So so SR period is equal to, and how to get 24 hours, because we have 15-minute candles. So it's a 15-minute candle times 4 is 1 hour, and times 24 is 24 hours, which might not be exactly correct, because sometimes, there are like market breaks. So, when the market is closed, so in some cases, when there's a holiday or whatever, it would take like other candles into consideration. But let's just, start with that and then we can improve it over time. Okay, so this is the SR period, and as a result, when we want to compute the high, so we get the, actually let me just go a bit lower. So here we have the price data, and let's just compute the things here. So here's the SR period, and here we have the OHLC high is greater or equal to completely wrong, is equal to so period high is equal to OHLC, and then here in OHLC we take the high, we take the rolling method, which basically tells us analyze all the candles in the past 24 hours. Then we add the period here, and then we need to compute the maximum value. And then here we will take the period low, and here we would compute the minimum value. Great. And then I can show you the indicators by specifying indicators, and the indicators are equal to high and low here. Period high, sorry, and period low. Okay, and now if you look at the price figure, we will see that we can see the highs and lows for each individual period. So that is actually great, but it is nowhere close to being to a support resistance. So maybe what I think makes more sense, if we are looking for intraday breakouts, maybe we are not interested like in a 24-hour breakout zone, but maybe in zones that maybe last 2 or 3 hours. So maybe I will just play around with it and see what results I'll get for various parameters. But for example, if I lower the period, you will see that these ranges will become more narrow, right? So what this actually influences is that whether we're looking for breakouts in the lower time frames or higher time frames. And here, for example, we see that the breakouts are a bit more reactive. So this is actually great, right? And now the question is, how can we actually define whether a support and resistance zone is actually significant? So maybe, and this is all a hypothesis, so I have to test that and backtest that. But I was thinking that, for example, when the range is very high, right? You see, for example, here we have the high here and we have the low here. We have a very, very high range. And for me, if I want to trade breakouts, I want to have a narrow range, right? So let's have a look at, for example, these two examples here. Here we have a very high range. And then here we have a very wide range. So these are like, two different ranges. So if I were to trade the breakout, right, for in the short here, I would choose something like this instead of something like this because the range is very high. And I mean, we can test that. So how do we get the range sizes? And so we can do something like SR range is equal to OHLC period high minus OHLC period low. And Martin Justin, maybe you could measure the difference between the high and low that you calculate in ATRs. Oh, yeah, great. So now we have the SR range, and then we can compute the ATR based on that. So I think this is a very good suggestion. Initially, I wanted to use the SR range, but Martin also proposed the ATR, which I agree with. I think ATR is something, is very generous. So the ATR and what period of ATR are we using? And I think a good way, to synchronize the periods is, using the SR period and ATR period to be the same. So ATR period, just to clarify, sometimes do 14, which is like a default, and I think it's commonly used by a lot of traders. But in this case, I think I prefer using like the same periods both for for the SR and ATR. So the ATR, to compute the ATR, we just take the OHSC data. We need to take the high minus the low. And then we divide, then we apply rolling. And then we compute the average, right? So ATR stands for average true range, which means we need to compute the average or the mean for a specific range. Okay. So now let's try to visualize SR range and ATR. So I think I can create a second plot and then we can have a look at it. So I could try to make a subplot, but I'm just gonna make it very fast. So ATR period is equal to ATR figure is equal to, let me import plotly express. So we import plotly.express as px, and then px.line. I think I need to run this still. Yeah, for some reason I don't like the song that I'm having here. I'm gonna skip this one. Yeah, I'm gonna put it out of my playlist. Yeah, this one's nicer. Okay, yeah, much better. So here we add the OHLC, then we want to plot the time axis, and then on the Y we look at the ATR, and then we display our ATR figure. Okay, so here we have ATR. So as you can see, sometimes the ATR is high and sometimes the ATR is low. So this is just the volatility. And if you look at OHLC, and then I'm gonna call it relative support and resistance range, which is basically our range divided by the ATR. This is what we are looking for. And therefore, if the relative range is small, we know that the price is consolidating in a very narrow range, and that we could try using for checking if that has some impact on whether the breakout tends to be a breakout or actually a reversal. So what we're just doing is we're analyzing these ranges if they have well, if basically these factors have some correlation whether something is about to break out or reverse, and we see that it oscillates up and down. So whenever we, for example, have a breakout of a range, and then we see that the oscillation or basically the value is low, what is more likely to happen, a breakout or a reversal? So I think we can start with this, and maybe I just write it down because I have again so many ideas. So here, test whether a breakout will continue or fail based on relative SR range. So this is my first question that I want to answer, and then the second one is and this is like a different topic, but maybe count the number of touches for for each support SR level. Great, so now we have this number of touches, a significant resistance level. So if we have like a breakout, which means the candle would close above this level, how significant would that be, right? And then we have also a problem with cleaning the data, because what's happening here is we have a high here, and this little candle is pushing the high up a bit, but I don't feel like it should create a new high, but it should be part of this same line. And then here we have another small push up. So that is like a difficulty of defining support resistance, because a new high that is made can be considered as the same level, or maybe it could consider as a breakout level. So I think it's all up to definition, how you define support and resistance. And so we also have to define what is considered a touch of a level, a breakout, and a reversal. So these are very important questions to answer, because they basically define how the algorithm is going to work with it. So I think we can start with this, and if any of you guys have any other questions, you can certainly ask, and let me know what other factors are important for support and resistances. Let me just check my really quick. So as you guys see, we are back in the red, so unfortunately we're losing again. but that's actually not so bad because yesterday we had a very nice profit on the US tech. So if you look at this graph, right, we made 71 euro on yesterday's trade. That's already closed. So we went into a long position here and then we exited, and it's like a really nice exit, right? So this is what our bot has open on the US tech. See that? So it exited like at this candle and then the market immediately reversed. So it was a very nice trade to look at, and I'm glad, you know, we have also some solid strategies that we can evaluate. So in total, I haven't done, you know, an analysis, but maybe we can, you know, run a quick check just on the US tech trading bot. I think we can also do that, you know, after I'm done with the support resistance. But I think overall the US tech we made us around 200, so this is not bad. Okay, back to support and resistances. So test whether breakout will continue or fail based on relative SR range. Great. So sorry guys, I have a quick toilet break, so I'll be back like in 2 minutes. So be right back, and yeah, just stay tight. All right, so thanks for waiting. Yeah, the US Tech bot is performing very nicely so far. So I'm very happy, you know, that we have that going on. So back to support, and you know, there's like so much to do, guys. So I'm, you know, a little bit stressed, you know, what to start with. But let's just, you know, take it easy. We have all day during the live stream, and when we finish, I think that will be, you know, at least hopefully we'll have some satisfying results and a strategy at the end of the day. Okay, so maybe what I was thinking, and I'm just writing, you know, all my ideas, not in a chronological order, but you know what we should have a look at. So I think what we should actually do is we should maybe let me try to, you know, visualize what I mean. So when prices range, right, you have like a high low, high low, high low, and sometimes, you know, the lows are, you know, tighter, sometimes higher, and the question is, you know, so here's our SR levels, and the question is, is this part of that support level, right? Or is this too much over that support level? Okay, so is this too much or not enough? And I think there must be a way to actually clearly define, if that piece here is, part of support resistance. And what I think is, what we should do is that we should maybe round the prices, right? So what I'm trying to say is we have open, high, low, close, like perfect to the 2 decimal places. But what if we round the open, right? And like to 1 decimal place. So maybe what the rounding does is it, slightly modifies, that range. So essentially what it becomes is we'll make, so this one might not be because it's too, close, but maybe again, we'll make it like look almost perfect on that chart. So this is actually what I'm thinking of right now, and I think this is maybe a good start, to try to identify the support resistances like that. And maybe what you could try doing is we could, as I said, round the values. So here we have the high and low prices. So instead of, here what I can do is period high, or actually let me compute it down here. Let's create like 2 lines here. So here I will do high rounded is basically our high value, and then we round it to 0 decimal places. And then low rounded is then, it's the low, and we also round to 0 decimal places. So if we try to compute now the support and resistance range based on these new values that are rounded, maybe what we get is a value. Oh yeah, Martin, image gets stuck every now and then. Yeah, that must be the internet connection. I think I've been having that issue, for some time now, and yeah, I'm gonna get it fixed ASAP. So yeah, hopefully it won't affect the stream too much. So I apologize for an inconvenience. Or let me actually just check my internet speed now. I think that would be interesting to see at least. Internet speed. Okay. Okay guys, yeah, thank you. So in case you guys have like any issues with the live stream, so unfortunately what you can do, for example, is maybe, watch the stream, maybe like a 1 minute delay or like a 30-second delay, and that way, it won't be buffering that much. So so apologies. And yeah, sometimes, when internet doesn't work, it sometimes feels like, there's nothing in your control. Okay, so let's continue with the rounding. So high rounded, low rounded. So let me just try to like take these values here, right? So now we are no longer using the period high and period low. We are using the rounded values. So instead of I made a mistake here. So here I want, the low. Oh, I want the rounded values. So I think now it should look somewhat better. So now if we look at our period high and low, what you can see here is that, you know, the curves, oh no, I think I made a mistake with the red line. Period low is low rounded, rolling SR period. Oh, of course, it has to be the minimum, not the maximum. So now if we look at these ranges, we can see that, you know, here we have like multiple values that are, you know, close to this one. So we are rounding these values so they stay straight. But in some cases still, right, this is 5,494 and this is 5,495. So the question is now, how precise do we want to have the support and resistance levels? Should they be like maybe precise to 1% of the price or 2%? I think that depends on, you know, time frame trading. So if you're like lower time frame, you want the precision to be higher. But if you are trading on a higher time frame, then the precision should be lower, right? And so now basically you can like maybe stick with this rounding, or I can maybe round it, like in this case, I think it's fine to round it to, I think, you know, one decimal place is good enough. And also question is, you know, when you have like a wick like this high might also be like not valid. So again, now the question is also maybe, I think this is also a good question. Should you consider high prices or close prices? Because if you apply close prices, then the range becomes more narrow, and then you filter out, you know, just the spikes, which to some extent is also like reasonable, because on the lower time frames there's a lot of noise, right? So if the price goes up a few points up and down, that could also mean that, you know, maybe that looks insignificant. So maybe we can also try to apply the close prices. So this is our close price, which we are going to round, so the rounded one, and use close prices instead. This is what it would look like. Okay, so let's have a look at the prices now. And so now I've applied the close prices. And maybe we'll have a look at an example here. So what you see here now is, you know, even though this price, you know, spiked up, this resistance level still hasn't been broken, because now we've applied the close prices. And I think this is something, you know, that we could, you know, potentially use instead. So I feel like, you know, using close prices looks somewhat, you know, more viable. And maybe, just maybe, I would also try, you know, maybe to go even into a much lower time frame theoretically. Because right now we have 15-minute candles. Oh no, I actually made a very big mistake. So this represents 1 hour, and this is for past 2 hours. So actually we're just taking 8 candles into consideration for our SR analysis for this case, if it's just 2 hours. And if we want to make 4 hours, it would be like 4, right? And you know, they say, you know, the longer a support resistance holds, you know, the more value it has. And let's look at it now. And guys, you know what? I'm going to, reduce the time frame a bit because, for the analysis, it might take some time. And after we're done with this, I will just, apply a long time frame. All right, so now it looks very interesting, actually. So maybe, if you look at this setup, this looks like very interesting. So here we have a very narrow range, as you can see. And then in this narrow range, we then see a breakout candle. So this breakout candle looks like a potential entry because then, as you can see, we had some short retracement and then it bounced up. So maybe you could start working with that, maybe as an initial, strategy input, and we can build on top of that. So instead, what I'm going to do now is for the support resistance, I'm going to shift the values by 1, and then I'm going to look for a breakout candle. Okay, so by shifting it, I can then measure the previous support and resistance value, and I can see or check, if that level has been broken or not. And if you look at some previous example here, so here we see many breakouts. So what if, for example, right, this is our resistance level, then price decides, to break out here, and then we would enter a long position and, continue in that trend. Okay, we can try it. I believe that if we were able, to run a backtest now on this, we would most likely, have not a profitable solution, but we don't know what will happen, right? So let's just run the backtest and see what's going to happen. So I'm just going to, again, to import, some on bar here, and then I'm going to also import, the backtester settings that I'm going to use in our support and resistance analysis. So I will also need to import my backtester now and run this. And here in this on bar, I'm going to make a very simple trading logic. So here I just need to check if the current close price, or actually open price. One second, what is it exactly? It's the I will check it actually on this chart just to confirm, or I should use open or close prices. So here I'm going to zoom. All right. So first this is a breakout, then it faked out again. Alright, so because I'm using the open prices for entry, I need to shift it by 2 because this level would still have to be breached. So in this case, I'm going to shift it by 2, and then the open price would have to be a breakout of that level. So I'm gonna run this again, and now in our signal function with on bar, I'm going to take data. So it is my period high. So data open is greater than our period high, then we do a buy trade. And then our exit signal yeah, our open has to be less than our period low, and then we would sell in this case if we break off that level. And for take profit and stop losses, how about we just use the ATR value, right? So we just use 1 ATR and see how it works. So if you look like relative SR range, then we see that on average the ranges range like around 3 ATR Or we could like in my London breakout bot, what we use is when we look at ranges, I exit it like in the middle of the range usually. So let's say I go into a short position here. Where do I set my stop loss? Maybe I can set it at the current candle high theoretically. And for take profit, I could maybe use a trailing stop, or maybe like try like a 1-to-1. Maybe if there's any edge, like try just 1-to-1 and see, you know, if that would work. Okay, let's just do like a 1-to-1 reward to risk. So if we are going to buy position, so our stop loss would be equal to the low price of the current candle or of the previous candle. Yeah, we actually need to use the previous candle because we're entering on that, so we need the previous candle high and low. So I need to compute more value. So OHLC previous high is equal to OHLC high shift 1, and the previous low is the previous low with the shift 1. So here with the previous low, here the stop loss would be the previous high, and this probably will look like a very, you know, short-term trade because the stop loss is based on a 15-minute candle. So I still think, you know, maybe the stop loss might be too tight. But what if we like set like a trailing take profit, you know, try to catch a big breakout? All of that is possible. Or maybe another option is we just use H1 candles, right, instead of M15, because H1 candles, yeah, might be more versatile in this case, where we basically just use daily highs and lows for the SR analysis. But yeah, we start with M15. I might switch to a higher time frame. So for our buy order, right? So where is the take profit? If the reward to risk is 1-to-1, so our take profit in this case would be our data open minus data previous low, right? So this is distance from the open price and the previous low, and then we need to add this value, you know, for take profit. So this is our take profit for the buy signal. So here TP would be equal to TP, and for exit signal we also need to compute the take profit, which is our data open, and here we do minus, of course, right, because we are deducting it's a plus because here the previous high is higher, so we can actually add it like that. So this value is negative, and then here the take profit would be equal to take profit. And let's see if I made any mistake here. Data open plus of course. The problem is that I wrote it in that block, but I should have put it down here in the in this, you know, in this indent here. Okay, so now I can try running this backtest, and I also forgot, you know, to add the exit signal, but we don't have to because we now have take profit and stop loss already integrated in our backtester. So let's run this, and in my opinion, we are going to have a very bad backtest, but we can just try and see how it looks. Okay, so here is now backtest, and let's have a look at, you know, our price chart. So here we are just going to look at the P&L chart, and we see that the strategy is very bad, like very bad. And the reason why is that, you know, not all breakouts, you know, have high significance, and we have a lot of commissions. So here we opened 2,896 trades, so we've paid 2,896 in commissions also. But maybe what we can look at is the winners, right? What separates the winners from losers? And if you look at the, you know, the profitable trades, which is for example this one, what differentiates the profitable trade from the losing ones? And we can maybe, you know, filter by time, close time, right? So all of that, we can like just look at the attributes, what is interesting. And now I'm going to use a method that I have actually not used in my previous live streams, but we can actually save data for each trade and filter by that attribute. So right now what we've done is we've took literally every breakout that exists, and now what we're going to do is just optimize it, see, you know, what parameters are actually the ones that are, you know, profitable for us. And here we see, you know, a lot of, yeah, it just looks bad. So maybe if the candle range is too small, there is no need, you know, to enter a trade, because if there's low volatility, the commissions are too high. If the commissions are too high, we can't make a profit. We can also try to evaluate the backtest, see if that works. I still haven't finished, you know, fixing you know, that part, because that part still needs some fixing. But let's also import evaluate backtest. And it's basically like a trade evaluator that looks, you know, at the win rates, at the general trade statistics. So if we run this, we should have you know, a rough overview, you know, how it performed. So biggest profit was 167, the biggest loss was minus 116. We see that buy orders tend to perform better than sell orders, and well, of course, because the S&P 500 has been, you know, has been bullish. So that means that that by filtering sell, and this is now like more like a survivorship bias. So just because the sell orders, if for example, you know, the S&P 500 was bullish, but the sell order types were in profit, this would be, you know, much more interesting for me, because then it would mean that we are trading against the market trend, but still we'd be able to generate some income. So we can either filter, you know, if the market's trending. So for example, if SMA is above 5 or below 5, maybe we can filter based on that. So maybe we want to check, you know, if, for example, we are with the trend, and if we are with the trend, then it means that we could potentially, you know, basically not trade against the trend. That's what I'm trying to say. But now let me actually try to maybe like analyze a breakout on the H1 time frame. I think this might have a little bit more potential. So what if I'm just going to, you know, analyze the candles for the past 24 hours? If I run this again, let's see how breakouts perform on a slightly more higher time frame. So this is what I'm interested in. And now I can export, you know, a little bit longer time frame, so maybe 3 years on the H1 chart. So now we're working with H1 candles. And let's see what we get now. Okay, so backtest doesn't look as bad as before. We see that the price is consolidating here, but we still see that we have some losing streak. And so again, buy orders are performing better than sell orders. So what if we try to, you know, apply, you know, some trend filter? Because we know that most of the time the S&P 500 was trending up, but also we see that in 2022 we have a downtrend. So You might not be sure yet. Yeah, buy orders are really nice. That's true. So we've increased, the time horizon, increased, the taper stop loss, so the commissions do not, eat us alive. And so this is again just a very simple breakout strategy that is using highs and lows, but it still requires a lot of work. So again, we were talking about number of touches, about candle ranges. Like if you look at this, right? So here, for example, we have this range here, and then we have a breakout to the upside here. So that should have been like a buy trigger. And like it's very easy to cherry pick good setups on the chart, but when it comes to backtesting everything, you will realize that it's actually very difficult to find high quality breakouts like in the textbooks, like super difficult, right? And so what else could I do? I mean, I've started some backtester, so let's continue with the trend filter. I think a trend filter is nice because I will compute the SMA 10 and SMA 200. I'm using SMA crossover filters to find the trend. So OHLC is equal to OHLC SMA 10 is equal to OHLC. Take the open price, rolling 10.mean, and I will also take the SMA 200. And here I take 200 mean. And then I'm going to create a very simple function. So OHLC trend is equal to OHLC dot apply. I'm going to create a lambda function. So this lambda function will define uptrend if X SMA 10 is above X SMA 20, else downtrend, right? And then here I will also add axis is equal to 1. So that way I can create a trend filter. Oh, this is supposed to estimate 200. So now that I have a trend filter and I can also visualize the simple moving averages in our figure. So here we have period high, low, and I can also add SMA 10 and SMA 200. Now we see our simple moving averages. Right, so here we would have a downtrend, here with an uptrend, and yeah, let's try working with that and see, if maybe we have some change in our backtest results, which right now is not very good. So here I have to add another, a condition, so that trend is equal to uptrend, and in the other section I have to, add and trend is equal to downtrend. And let's run the backtest again. Okay, we see some slight improvement. So at the start of the year, we see that it tends to work very well, but then we still have this, very nasty downtrend here. So I think like the trend filter didn't do that much. It didn't do that much. Like what we see here is that Fridays are most profitable. Like, do we want to over optimize it and like just trade on Fridays? Like theoretically I could, right? But that is interesting. So So like what is going on here, right? Why are the trades underperforming down here? So, well, it's again a tough question. We don't know. But we can visualize the backtest and have a look at it. Okay, so we will visualize the backtest and then we can have a look at the individual trades now. It takes some time. So I don't like to use this method. So this method what it does is it is visualizing OHLC data and then it is also displaying all the trades you know, on the OHLC chart. And it does take some time, so it takes a lot of memory, but you know, if you want to analyze something, it's like very useful. But I recommend using it like on a smaller like data size. So for example, instead of using 3 years of data, just use 6 months or 1 year, and then it should be much faster. Still takes some time, but yeah, we have a lot of time. Let me check my Bitcoin trade. Yeah, thanks. So I'm really happy I code this library. So initially I used this library, you know, to teach people how to use algorithmic trading. So I used to just write everything myself. So when we look at the Algo trading lib, you're right. I used to write all myself. Like I just copied some templates, you know, some old files, and you know, just ran the backtest. But then, you know, to make it easier for you guys, I decided to make this backtester. And then over time, I realized I actually made like a very nice class that, you know, manages everything. And then, you know, I started using myself, and therefore, yeah, that's how this came to be. And now, you know, recently I published it in PyPy. This needs a lot of work, documentation. So, you know, big respect to people who publish, you know, their packages, open source it, document everything. All of this, you know, takes a lot of work. And, you know, that's why, you know, open source projects are so awesome. And no wonder that a lot of people... Aww. Martin just donated, thank you, that's really nice. ARS, that's some Argentina, what does the S stand for? That was my very first donation, Martin, and you know, I'm very happy that, you know, that it was from you, because you've been supporting my channel for a while now, and you know, that makes me very happy. So thank you very much. So where was I? Yeah, so people who make open source projects are awesome. Not trying to talk about myself, of course, but you know, all of the work, you know, that we're working with, guys, you know, we have like MetaTrader 5, we have Plotly, you know, Python in general, like the programming language is so awesome. And literally, you know, coding maybe 10 years ago was much more difficult than now, because you find all, you know, free education, documentation, all the libraries are so advanced that, you know, I was not able, for example, to code with MQL5. So if you know MT5, right, you know that there is an editor in MT5 where you can write your code, right? And when I was starting, you know, with the advisors on MQL5, like all of this code was so difficult to work with, because when you look at the documentation, you need some IT background, or you know, at that time, I believe that you needed some IT background to work with that. And now I think it's like not necessary. It's your country, it sucks actually. Yeah, very unfortunate. Well, I guess so you hold your currency in USD, or do you like hold crypto? How do you know work around that issue? Of course, if you live in a country, there is no way like to work like to have a workaround with the currency, but yeah. But now we're in like the topic of finance, and you know, what is money, and you know, what currencies are good and bad. For example, me, I've been living in the Czech Republic, right? So if you look at the Euro CZK, like for me, like I like the Czech Republic, so you use the Czech crowns, but you know, everywhere we go, we have euro because we are part of the European Union. So what you see here now is now the euro is going up, so it maybe increased by 15 or 20% from like the low. So for me, every like European goods were more expensive, but you know, luckily I fund all my trading accounts in euros. So for me, I actually didn't, you know, lose that much, you know, on this exchange rate. But I assume in Argentina the situation is much worse. You know, the result forex. So it's the Argentine peso that you're using, I assume. All right, so. So now I actually feel you. Like this looks very bad. Juan also donated. Oh, you guys are so nice today. Thank you very much. And yeah, moment of silence to this chart here. This is like insane what I'm seeing here. All right, let's not be sad. That's, you know, why we're, you know, standing here. We're trying to make money, so we should actually, you know, continue trading and, you know, try our best. I know what to say, guys. Like today I got my first donation, and actually now I got 3 donations. So yeah, these gifts are actually very amazing. Love you guys. Well, I'm in shock actually. Yeah, I think I'll have to start doing giveaways because you guys are so generous that, you know, I have some. Yeah, I do have something good for you actually that I can share with you next stream, so you might be interesting. You know, it might be interesting for you. You're doing a great job. Thank you. It means a lot to me. Blackmon is winning GP. It's the top currency. It is. I mean, another thing you could do is like, you know, work with, you know, the Swiss currency. You know, the Swiss, I think they are actually one of the best, but compared to, you know, the British pound, yeah, it's crazy. No, but you know, when you're like stuck doing algorithmic trading, you don't like think about macroeconomic events. You don't like think like what's happening behind, you know, like in this world, right? You see for the USJPY, if you look at like a daily chart, you know, it's been like rising all year. Like, oh, Japan is screwed, and like what we traders are doing, like, are we just trading that? We don't mention, yeah, like we don't feel it. But then in your everyday lives, when you actually have to spend the currency, you do see the, you know, the impact of forex. And now that we're talking about it, yeah, currencies have a lot of meaning in the world, and not just, you know, it doesn't only mean like, you know, buy sell, because this is what I'm stuck in, you know, all day. I'm just looking at prices. I don't really, you know, think about the macroeconomic impact, so that is, you know, also very important to think about. And yeah, so now the backtest visualizer is done. So now if we look at the visualization, so what do we have here? Well, I live in the UK, but my wife's from Mendoza, Argentina, so I know about ARS. Yes, I have actually 2 guys who are, you know something about Argentina. I've never been there, but I was actually thinking to visit Latin America next year, maybe during winter, because yeah, in Prague it can get pretty cold, and I was thinking, you know, maybe visit Mexico or some Caribbean islands, or, you know, go to Brazil, Argentina. So all of that is like on my bucket list. So yeah, so maybe if I'm in Argentina, I'll definitely give you, you know, a call, Martin, and maybe can meet up. That would be great, for example. But I know how, you know, it's very far. So Czech Republic, Argentina, I don't know how long is it? Is it like a 15-hour flight? check. Okay, I think it's a very long flight. It's 20 hours, 16 hours, 22 hours. Yeah, so yeah, that's pretty crazy. Right, so I'll let you know. First, once I flew to Tanzania, like for a safari trip, and the flight was so tiring. Like we had to fly for 18 hours or something, and we flew, at night, and we couldn't sleep at all. So when we arrived, we were so dead because then we had to spend like 2 or 3 hours at each airport, and with like two transits. So it was very tiring. But I guess maybe I can split in smaller parts. Okay, so yeah, we're back here. So what do we see here? We see that the green dots are profits, the red dots are losses. So what I can see immediately is like if you look at the like profitable trades, right? You see like buy and then buy and buy. It looks like when the market is trending, we have a long streak of winners. So maybe instead of re-entering the trade over and over again and paying commissions, maybe we can try to create like a trailing strategy. So maybe a trailing strategy here would make a little bit more sense potentially. And let's see, when we have losers, right? Losses. So here we see the same thing in like lose, or win, lose, win, lose, win, lose. So it's like oscillating a lot. So I think I need to reduce the number of trades, right? Or maybe like increase the take profit stop losses. Or here again, we see a lot of losses here. And here's an example of like a lot of fake outs, right? If you look at this, breakout, loss, another breakout, loss, win, another breakout, loss, a big loss, right? This candle. Yeah, this strategy is not like too good at the moment. And so what else could we do? Maybe we could limit like one trade per day. Or remember when we work with the German, the DE40 breakout bot, we only work with the first breakout, right, of the day. So we just wait for one breakout for a very good setup, and then we enter, and then we only have one setup per day maximum. So this is a way to filter out bad trades. And maybe another filter is maybe we can also like this candle, right? We see a very strong breakout candle to the short, and then it moves back up again. So I wonder what we should be doing now to improve that. So we need mainly, the first third was profitable. Most of the money was lost between 2022 and 2023 or 24, right? This is a 2-year span, and then again, not much happened. So what does the price look like between 2022 and 2024? So it's 2022, right? And this is 2024. So it looks like in this period, or maybe like in this period, right? We are seeing very bad trades. So maybe, I think we should go back a step back and maybe analyze, as I've proposed before. There's a question, maybe use the relative SR range, maybe to analyze, because what we haven't analyzed yet is how valid or how strong the support resistance is. We just checked, if a higher low was broken, and therefore I think this is like a good next step that we should like implement. Like, how do we make sure that this support resistance is good? And maybe we can have maybe some class examples. So this one is very interesting. Here we have a breakout to top side, then we broke out back to downside, and this is a very big trend. Maybe, you know, the DAX breakout bot is using the time intervals, right, between 9 and 12. So maybe we can check the breakout by hour. That is also something that we could try. So let's see all the parameters that we could be used for backtesting. So we could use breakout by hour. We can do breakout by relative SR range. We can also do breakout by. We can also breakout by the breakout candle size. Aquan, you just became a member. Thank you for your support. It's today you guys are very, very generous, and I appreciate it a lot. And what should I say? Now I'm just more, you know, motivated to create content for you guys. So at least I can give something back, right? So I can, you know, share the code with you. And you know, I think maybe now, even though it's not a lot of like members, I was thinking for like a long time that maybe I should, you know, start providing like a member only content. So, you know, after today, because you guys are so generous, I think, you know, maybe 1 or 2 days in a week, I'll start streaming just for my members. So I can at least, you know, make you feel special a bit. So I'll think about it, because, you know, it's especially you guys, right, who are supporting channel that are the most important to me. And yeah, even though, as you guys know, I'm currently, you know, starting small, but you know what they say, the first members are the most important ones, and I think I really do feel that way. Well, if it's too good to watch for free, then I should definitely make it like a member only, right? And of course I need to start making some profits, because the BTCSD trade is, you know, draining me out. Like, not draining me out, but when we were in the green, it felt nice, of course, right? We all like to make profits, but in general, like based on the close positions, we're like $41 US in profit. And you know, I should eventually scale it up, but like I'm not interested in like having like a big account right now and doing big trades. Like for me, like I quit my job like last year in December, and like I was working for a trading firm, and then I decided, why not, you know, try trading. So maybe you've realized like I'm not some like guru who's making millions every month. So I'm more like still in the like learning process, where I'm actually trying to, you know, apply some risk management, you know, things I learned in my company, and I'm trying, you know, to, you know, work on my speculative trading. So right now I'm probably just, you know, up $10,000 US for the current year with my live trading, and this is definitely not enough, you know, to like depends also where you live, like, but 10,000 per year is like a good start. But you know, you can't like guarantee profits every single year or month. So what I'm concerned about is more like the consistency, and I want to make sure that every strategy that I develop is like the best it can be, right? So that's why we're spending more time in our notebooks rather than staring at the charts, because theoretically I could just, you know, press buy and sell, but I actually enjoy more being on my notebook and let the trading bots, you know, do their thing. So this is the way, you know, I like to work. All right. So again, too much talking. So yeah, breakout by the hour, by this SR range, and breakout by candle size. And then also breakout by num touches. So these are all important things that we should, you know, be considering for the breakouts. And yeah, let's start. I think let's start with breakout by hour. So to compute the hour, we use OHLC hour is equal to OHLC time.dt.hour. So now we compute the hour column. I think I should display the OHLC, you know, at the end down here, so we can see all the data that we're computing. Okay, relative support resistance range, ATR, SR range, period low. So we have all the data here. And like when it comes to breakouts, the question is, like last time in the DAX breakout bot, what we did, we always computed the gain after every hour. So maybe what we should do is, we should just, count. If you have a breakout, so this is the question, right? So this is what we're going to do now. And again, all points. If we have a breakout, what is a chance that price will continue or reverse, right? This is now something that we want to work on. And so let's start by hour now. So DF by hour, let's just call it DF by hour. Is equal to OHLC dot group by hour. Oh, I also need to compute the gain, right? Because I want to check, if we enter for the open price, I want to know the next open price so we can close it for next open price. So our gain, I can actually copy it here. Our gain is equal to OHLC open, and we want the dot shift -1, so we're getting the basically the next open price minus the current open price, and that way we can compute the gain. And also I think yeah, so we do this, and as you can see now we have like a lot of numbers we are working with, like a lot of columns. But I guess when you have so many ideas, you just need to compute all of that. And I think like this SR analysis, this will be like a foundation for all breakout trading that we're going to do in the future, right? So I was inspired by the breakout bot, that is just in per session, and I thought, why not analyze like all possible breakouts? So we might just become breakout traders at this point. So now we need to check if there's any breakout. So actually I'm going to create a second cell, because I think now we're still not ready yet. We still need to do some data preparation. And to prepare more data, we need to, let's create a function, define check breakout. Like it's a very similar function that we've created on our with our DAX trading breakout bot. And here in the breakout analysis, maybe I can copy a function that I've already made, and here's like check breakout high or check breakout low. So we just want to check if the breakout is bullish or bearish. So to check the breakout, what we can do is create a very simple logic where if X open is greater than X, and then we take the session high, or the period high, then it's a bullish breakout. Then return bullish breakout, and then otherwise or else if X open is less than the period low, we return bearish breakout. And recently, right? Recently, I've started using numbers because the numbers are good, for some future operations. So let's just say, 1 represents bullish breakout, and -1 represents bearish breakout. So now we have that. We have a bullish breakout and bearish breakout. And let's apply the function to our data frame. So OHLC breakout type is equal to And here I will do ohlc.apply. We apply this function, and here we set axis is equal to 1. Okay, so now we have the breakout type here, and let me just try to show the breakout type. So breakout type isn't basically filters out the values, and I want to filter out values 0 and 1, and I forgot a dot here. So with this statement here, I can just filter, oh, not -1 and -1 actually, right? And here I see like this is a bearish breakout, this is a bearish breakout, this is a bearish breakout, and this is a bullish breakout. So if you look at the number of rows in OHLC, it seems that we will have like 30 of these cases. Let me just reset the index. Or how does it work? Or because it has 3,665 columns, but probably it's taking it from the entire data frame. If I make a copy of this and I call this the breakout df, then maybe we'll see a difference. Whatever, it still shows 3,800 rows, but we definitely do not have 3,800 breakouts. Or maybe we do. Actually, we probably do, because how many trades did we make? A lot. We made a lot of trades. So, yeah, it's right actually. So, in this breakout data frame that we've just computed, we have 3,865 breakouts, either to the upside or downside, based on the breakout high or break low. So now what I can do is, because we have this data frame now, and here I can, for example, check breakouts by hour. Okay, so I can do breakouts by hour. Also, I'm going to create a column count breakout, so I can count the number of breakouts that we're now testing. So count breakout is equal to 1. And here we use breakout df dot group by, and here we look at the hour as index is equal to false. And now what we can do is breakouts by hour is equal to breakout df dot group by, hour as index equals false. And we want the gain and we want the sum here. Maybe I should use percentage gain, so we always have like relative amount in percentages. I think that should be better. So our percentage gain is equal to our gain divided by the open price, and that way we can get the percentages. Open, and let me just multiply it by 100, so we will now work in percentages. So let's run all of this again. So we have percentage gain, which is our sum. What we will count the count breakouts, which is also sum, or we can also use count because it doesn't matter now because it's 1. And let's have a look at the results. Okay. Oh, and we also need to group by the breakout type, of course, right? If it's a bullish or bearish breakout, that's very important. So this is the breakout type. Nice. So maybe before we have a look at the breakout by hour, let's just have a look at how are bullish breakouts comparing to bearish breakouts. So bullish breakouts here, you see that even though we went short on the bearish breakout, the price increased, and when we went long, the price increased. And we had more long opportunities than short opportunities. So it means that even though we have short breakout signals, they are nowhere profitable. And because I said, that the S&P 500 was trending up, so I think the trend has something to do with it. But then we can create some filters. But now let's try to add some other factors, right? So we wanted to check hour, for example. So we look at the hour. So we have hours from 0 to 10. Or 24. So, and maybe I think it's time to visualize that because we can't read anything from this chart. So I'm actually going to create a bar chart. So px with bar, and we're going to have a look at breakouts df2. And x is equal to time, and y is equal to percentage gain with and here bar mode is equal to group. So what seems to be a problem here? Oh, we don't have time, of course. We are analyzing by the hour. Nice. And or is it grouped by any chance? No, it's actually group. It's group, and color is equal to breakout type because we're differentiating between buy and sell. Okay, so yeah, that is interesting. So we see that the best breakout opportunities on the S&P 500, right? Because in the morning, so now we're looking times, right? So according to my time, the US market opens at 16 or 15:30 my time, GMT plus 2. So here we see the market open, and the yellow ones, they represent bullish breakouts, right? And the blue ones, they represent the bearish breakouts. And what we see here is that the breakouts tend to perform the best at 21 and 22, with the bearish one being quite bad here. So what if we just wrote the backtest? We'll enter breakout at 21 and 22 and nothing else. We ignore all the other breakouts because you see that it's all random. It almost makes no sense here. What we also see here is like a 30.00. But I'm also surprised, or not surprised, I'm happy to see that we have bearish breakouts, and even though the market is trending up, the bearish breakouts perform well even at 21.22. So how about we try to apply this, right? So this is some analysis, some finding from analysis, that the hour filter works here quite well. So we might be trading the S&P 500 at 21.22, and then I also wanted to check maybe the breakout candle size and the relative SR range. So this is another thing I'm going to do, but let's take a step back and go back to our backtester. So I'm going to create a backtest that if there's a breakout candle 21 or 22, I'm going to long, and if it's short. So this is actually again selective trading. So this again might be some case of overfitting, but we don't know until we try. So I'm just going to do that. So now if open is greater, or actually I don't need to use that now, I can now use the breakout type. Right, so if breakout type is equal to 1, so we know it's a bullish breakout. Let's ignore the filter. I can just say hour is in, or hour in. It's on the diaphragm now, 21 and 22. We will enter a buy position, and we will exit immediately the next candle. So now we don't need to take our stop loss because we will just close the trade immediately after entering the trade after 1 hour. So this is essentially just a 1 hour trade. and we're going to apply the same logic. Let me just leave it here in case I will need it in the future. Let me apply the same logic to this part here. And here breakout is -1, and here it would be sell. And so for my close trade logic, what I'm going to do is I'm just going to immediately close the trade after that. So again, I will copy some of my code from my previous one here. So here's our exit signal. So basically, we just exit immediately after the next candle. So if we have a next candle, just close the trade in our backtester. And I'm excited. Let's have a look. Okay. No, still nothing. But let's have a look. Maybe it's a commissions. Let me set commission to 0 and see what happens. Yeah, so that's very strange. So based on this analysis, I believe that we should have a profitable curve. So I need to like think a bit what might be the reason for this not to work, and maybe, you know, maybe I made just a very silly mistake. Oh, it's greater equal to. So I have to do equal to. So that's a mistake. Okay, let's try again. Okay, so now the backtest is done. And we see quite a nice profit curve actually. Juan just asked, this may be a bit complex, but sometimes breakouts are fake outs. So how about filtering by requiring some confirmation? Yeah, that's right. So what I've actually done is, so everything you see on this chart is a breakout, right? So for example, if this blue one is a breakout, right, at 20.00, it's actually a fake out because after the break of that candle, price tends to reverse up here. And for example, breakout plus resistance breakout level, strong impulse in direction of breakout. Okay, yeah, that's actually a very good point. And I think, so today what we're doing right now is an analysis of a single candle, right? So if you look at what we're currently doing today, and I think we need to save it, is that we are just analyzing a single candle. And what you're proposing, and I think that maybe this week we might jump into it, we can look at multi-candle analysis, right? So this of course requires more computation time, more logic, but as you said, we can, for example, breakout, then have like a small retest, right? And then like a confirmation candle, like a bullish engulfing. So in this case, this would be red, of course, it's a bearish breakout here. This would be green, and this would be red. So maybe we can try to look for these setups, and I think that is something that is a very legitimate idea, and that we could also use, you know, for our breakout analysis. I'm able, for example, to identify these. So for example, this right here, we already are able to identify. This is our breakout candle, right? So our BO candle. And you guys know what this is, right? So this right here. What is this right here? This is a 2 candlestick pattern, and this is a bearish engulfing. Okay, so this is a bearish engulfing. Or perhaps some fair value gap. Yeah, I think all of that are very great ideas. So I think we can actually test that, right? So for example, we can do is first we can analyze this candlestick pattern and try to find them at the support resistances. But I think again, what we're missing in our backtester is that our support and resistance identification is not good enough. And what I mean by that is that we're just measuring the high and low of a range, nothing else. So maybe before we actually jump into candlestick patterns, fair value gaps, and some retests and whatever, we should, for example, check number of touches of each level, and also like how tight the range is, right? And also like the trend filter, which in my opinion should be like the first step to do that. And after that, we can look at the types of breakouts and the retest and so on. So so I think, yeah, these are like the two things that come to my mind. And like, I appreciate your input. This is like very good, and I absolutely agree that we should maybe look not just at the first breakout, but maybe like a retest and then continuation, which is actually very common, right? And of course, what is a retest and continuation on the lower time frames is basically like a impulse, pullback, and impulse. That's what I was doing when I started out with manual trading, because this can like be represented like on the small time frames, something like this, like that, right? So this would be our new support level and continue down there. So a lot of like abstractions, a way to represent that idea, and I hope like by the end of the month we will have like a, well, that might be ambitious, but like a universal breakout bot, that is able to identify these breakouts on various assets using candlestick patterns, the retests, and so far, I think the D40 breakout bot has the most potential when it comes to like intraday trading. So I like, ever since finishing that bot and doing like these times unifications and the breakout analysis, I'm like really interested in how these key levels work, because sometimes you can draw them anywhere, and you see if you just trade breakouts blindly, right? And today we've actually proven that if you trade any breakout you see in the chart, most of the time you will just end up losing, right? But if you are able to select with very good filters which breakouts are good, bad, for example, the hour filter, in my opinion, is very promising, then there is a very good chance, to succeed. And also, yeah, I forgot in my breakout bot to include one thing, the commission, right? So our commission per contract on the S&P 500 is $1. So we would have to, adjust this chart a little bit, and hopefully it will not end the result that much. So yeah, so we still have a profitable curve here, and then it seems that the market tends to be like ranging for the rest of the year. But for what seemed to be like a very losing period between 22 and 24, now becomes one of the most winning. So it's very interesting to to play around with the numbers and see what works. All right. So back to breakouts. In my opinion, doing the number of retests might be, the most difficult thing. The number of retests might be the most difficult one to work with. But we still have like the candle size. I think we should do an analysis on the breakout candle size. So we have the relative SR range, and the next thing I'm going to do is the relative candle size. And this we use in our DAX breakout bot already, right? So we're applying the same idea on this, on this backtest too. So relative candle size is our candle range. So our range is OHLC high minus OHLC low. So it's the current range divided by the ATR that we've computed. And now let's run this again, and let's see how our breakouts perform by, based on the relative candle size. So I'm going to create a new data frame. I'm going to call it DF3, and here I'm going to do it by breakout type and relative candle size. Oh, of course, I need to round the candle sizes to integers, because then the group by wouldn't work that well. So relative candle size, and I will convert it to an integer. So s type int. So now it's an integer. Right, now it's an integer, and let's go down here. So percentage gain and count breakouts. Let's see what we have as a result now. All right, and I can't use hour, but I'm now grouping by the relative candle size. It seems. Wait, can I convert non-finite values NA or integer? Okay. Yeah, I think because we use a lot of rolling here, so now the problem is that we have some num values. So I will just drop none values so we can work with that without it. And again, yeah, we have some rolling here as well. Let's just do it here. Nice. So now we computed that, and now we have the relative candle size. Let's run this, and let's run this. Hopefully now it works. Okay. Okay, so that's very interesting. So what we have here is the relative candle sizes, and I will also add some other hover data, so I see how many candles there are. So hover data is equal to count breakouts. So I can see, if there are a lot of breakouts in that range or not. So I think we found another great example for breakout. And okay. Donc klikli od parkuje. Tung tam je, jo. Sorry. Someone just needs to, park my car somewhere else, so I just, share my keys. So here the relative candle size, if it's a bullish breakout, then anything that has a relative size 1 or 1 point something is bullish, and every other bullish breakout is bad, right? So every big breakout, so the higher the relative candle size, the bigger breakout, and the more likely it is that there will be a retrace. That's what it means. And interestingly, yeah, for small breakouts on the short, let me actually try to work just with this, right? Or maybe another thing I could do is relative candle size and then also add the hour. So all of that is very interesting. Okay. So now we're going into the field of over optimization, because maybe I'm using too many factors, too many parameters. But here the hour is 22, 21, 20, 19, 17, and so on. So most breakouts tend to perform better, or at least the bullish ones, when we are actually trading in this zone, right? Because if you look at our breakouts, with large candle sizes, then we don't want to trade them. So I think, yeah, that is very interesting. So what I'm actually going to do now is I'm going to run a back test where our relative candle size is between 1 and 2, because this is what it represents, because this is where we made the most profit, and I'm going to ignore rest. And for a short trade, so this all seems to work. So I'm going to add another filter, and I think we might improve it a little bit more. So now we see that we have a profit of 1,700, and so we add the data relative candle size. Oh, I forgot one thing, and that's a big mistake. I can't work with a relative candle size because the candle is, if the candle is not closed yet, I don't know what the range is. So as a result, I need to shift the values by 1. So I need to take the previous candle size into consideration at the current one for the breakout to work. Wow, that's a great analysis, exploration, potential process. I have to learn to do this. So a lot of things I do is I actually look at the data, like also visually. So I think what helps a lot is, look at some data, right? Visualize them in like different formats, and then creating these charts, and then trying to look for some patterns. And once you find a pattern, you start backtesting that, and then if you're happy with the backtest, you then run the trading bot. There. Okay. And now, the data is a little bit different because now I changed the relative candle size. So here, the candle size is now different. And that's because I had to shift the value. And of course, you can make a lot of mistakes backtest. So I wouldn't always it happened to me many times that, this is great. This is like a breakthrough. But then after a few days, I realized that I made a bug in the code, and it's very important to double check everything. So what do we see here? When it comes to short positions. Oh, and I added the hour here. Let's look at the analysis just by candle size, and then we add the hour. So when the relative candle size is between 0 and 1, the price tends to go up. But when it's between 1 and 2, it tends to go down, and so on. So it is now, that is very interesting, right? And it seems like candle sizes play a big role in that. But now I'm going to filter by hour. And maybe the hour values will give us some better understanding data. And I'm also going to add the hour in the hour data. So yeah, see that? So breakout when it's 22, 21 tends to perform better again. 20 even is quite good. And when it's 23, 18, 17. Yeah, so this is like a multi-dimensional analysis now, and it's getting quite difficult. Once you have more than two parameters that you're testing, it can get very difficult. And I think this is where you mentioned machine learning. So maybe once we start testing, based on hour, then relative candle size, then we test based on count breakouts, count retests, and so on. Everything we've computed here, right? I think machine learning will come in handy when you have a lot of parameters. So right now I'm still testing on a very simple level because I like it simple. But maybe one day we'll find so many parameters that we want to actually test, and this is where we maybe can use machine learning. Juan, I need to collect my rewards from school. Nice session. Keep up good work. Yeah, thank you for joining, and thank you for membership and the support. So I was very, very happy that you guys enjoy it, and yeah, have a great day. Okay, so what we see is that we should mainly work with candle sizes that range between 0 and 2 because this is where most of the breakouts happen. And we do see that that the bearish breakout worked the best when the candle size is actually 1. Okay, we can try using this, but I'm just going to be very strict and just going to test the relative candle size is equal to 1, and then we'll see how. So the relative, this is like a break. This is the breakout candle size. Bye, Juan. Again. Okay. So now the backtest looks, I think, slightly worse because we filtered out like a lot of trades, because now I filtered by relative kind of size, because now it seems like even though the short positions tend to perform slightly worse, the profitable ones are outperforming this one. So if I add 0 and 1, maybe that could work. Let's look now. Right, so it still looks very similar. So yeah, now the strategy doesn't look that good anymore because all the profit was made within a single year, which is amazing, right? So if you can like find something like that, that's really great. But yeah, I think there's like still something missing. And I know what it is. So ever since we added like the relative concise filter, the strategy has been performing a little bit worse. Like it's been performing better in that part, but then for the next like 2 or 3 years, there was no profit. And this is what I'm concerned about. Like this strategy is not as consistent as I'd like it to be, but at least, you know, it's not losing us money here. Like compared to our breakout analysis on our D40 bot, this what we had a lot of less trades. So it might also be luck, but I feel like you can't use this like breakout for like consistent profits on a yearly basis, for example. So that is like very difficult, and it's something I wouldn't use. All right, guys. I'll take a quick break. I think I'll make myself some coffee, and I think yeah, we can continue on the breakout analysis, you know, after I'm back. So I'm just gonna make like a 15-minute break, if that's okay with you guys, and I'll be back yeah, at probably 4:15 GMT +2. So I'm just gonna write it in the updates. Okay. Uh, 16:15. All right. So be right back. All right, I'm back. You know, it's actually difficult to enjoy coffee because after 15 minutes it's still so hot, so I can't actually really drink it. But yeah. Well, Nicole just, coming for value gap, lol, lol. Like, the thing about ICT trading is that I don't really like it like that much either. Like, I had a look at it and everyone's like super hype about ICT trading. I think like 5 years ago when it started out, ICT wasn't even that popular. But now literally everyone talks about ICT and that's very interesting. But there are like very interesting concepts, like fair value gap. And like you can always call it what you want, right? In trading, there are like very 10 words to literally say the same thing, right? But I think at the end of the day, every strategy is somewhat right, has some potential, but the problem is that you just need to backtest it, right? So you can say you do this, do that, and you don't know what the result is, but at the end of the day, if you are able to backtest that idea and you have a profit training curve and then you apply it on on your live account, then it's great. So generally I would say like everything you see online when it comes to trading, you should always doubt the people, but you should also be like open-minded to new ideas and then test the ideas yourself. So I would never, for example, if someone tells me do this, do that, but go buy, go sell, I would never do that. I would always ask, why do you go buy? What is like the strategy? What is the idea behind it? Do you have some track record, or do you have some backtest, or do you have some like scientific or research evidence behind the strategy? So I think yeah, so when some people hear ICT and fair value gaps or whatever it is, they immediately go like, yeah, that's the holy grail, or like that's a complete scam. And I do understand both sides. And also like, some people profit only with SMAs. So it just comes down to having a strategy, having it tested, having some experience with it, and that's basically it. And whatever you call it is just up to the trader, right? Because when I started trading, like 5 years ago, we didn't use the term fair value gap. We just used price action patterns, like we call it pure price action, drawing support resistances, formations, maybe some candlestick formations, the very basic. And I think ICT trading is nothing else than like taking these concepts a level above, right? Trying to make it like more advanced, sophisticated. But at the end of the day, it's just price action trading based on technical analysis. So it's not like new science, I would say. If anything, ICT makes it rather more complicated than simple, and that's why I don't like it. Yes, correct. So as Nicholas said, you need to find the edge first. Edge comes from backtesting, looking at that, and not everyone uses Python to backtest. There is actually an app that is called Forex Tester, right? I've been testing that, and one of my colleague, has been also working with it, because most of my friends, they're manual traders, as most people are, and like of course, it's always better to pay for a product that costs a few $100s, than lose $100 on a live account, right? Because we all know the statistics. Most traders are losing. Like, almost all traders are losing. And therefore, I feel like, if you like invest more in education, the testing, this app, you can just, forward all of these, like backtest all the trades manually, and you can like, fast forward all the historical data. So if you're like a swing trader on the D1 chart, you don't need to wait a day to see if something happening. You can just forward that. And so when you are not like an automate tester, maybe you should try some some forex testing tools that can like move forward. Nicholas said he has Forex 6 as well. Can you use Python on it? I don't know. Like as I said, one of my colleagues is using it and he's trading manual on it. I use pure Python because I just write algos. At this point, I do almost zero manual trades. And if I do manual trades, they're based usually like long-term trades, like this Bitcoin trade, where I just have to click a buy button. But it's always based on my Python analysis. Tips, hello sir, we use VPS for of us to watch you. Interesting. Not sure what you mean by that. Okay, so I'm thinking. After I finish this coffee, we can have a look at further backtests, find some optimizations. I think I'll maybe have a look at, the touches and SR ranges. And I think, that would, be it for today. So probably, will be done in about 1 hour or 1.5 hour latest, and maybe we can continue tomorrow. Tomorrow's Thursday, I assume, so yeah, that should be fine. So as mentioned, we still need to connect the DE40 breakout bot. That's like still in progress, and yeah, I've deployed on a VPS, so we'll see how the results are going to be. But again, like over the past 2 years, there were only like 90 trades. Let's have a look at the backtest together. So this is our breakout analysis on the D40, right? So we made this backtest on the DAX breakout bot. Here we're trading just one contract, and yeah, we have 60 trades over past how many years? 2.5 years, right? So it's not a lot. It's 20 trades per year, which means it's trading only 10% of the time. So 20 out of 200 trading days. JP Morgan was a successful trader in the early 19th who used astrology to profit from markets. Well, sorry to disappoint you, but I'm not sure what astrology is good for in trading. Like, when I work as customer support for a trading company, I had this trader also who was talking about astrology, and I was wondering, how could traders use stars to create trade decisions? Like, I could try to backtest this or maybe find some correlation, but yeah, that's very interesting. Or what do you guys think? Can Pluto tell me if I should go buy or sell? That's a joke, of course. Some people with moon faces. Yeah. Hey, reliable tips. I'm not sure if you're like serious, but you know, we had like this conversation on my Discord channel this morning. So yeah, I don't know what to take seriously right now, but it's funny. They use stars just like fair value gaps. I mean, there's a gap between stars. You're right. I guess you can use that. Like, I think I'm getting used to this. It's like quite nice, you know, having a 2-hour stream, then having a coffee break, have a quick chat with you guys, then work for 1 hour, and then go home. I think, you know, that's a schedule I can get used to. The secret to trading is in the stars. So I guess I'll sell one of my screens and get a telescope. Can you check moon phases on Python? If not, I'll make a library. Python astrology moon phases. I wouldn't be surprised if it existed. Oh no, there is a documentation. Look guys, there is Astral v3.0 on Python. It can check sunrises, sunsets, twilights, and so on. I think it works mainly with you know, the sun, but not the stars. But I think we're very close. I took S&P up. Your guarantee. Well, rule number 1 trading, nothing's guaranteed. The only thing that's guaranteed is losing your money. That's, I think, yeah, that probably is guaranteed in some cases. Yeah, I've heard a lot about Jim Salmons. The question is, you know, if I'll be as good, right? Yeah, I'm sorry, reliable tips. I think I need to hide your comments because they're not very valuable to the stream. You're spamming a bit. So I putting you on 24-hour timeout, and I guess everyone who's watching will understand why I'm doing that. Oh, I almost finished my coffee. We can go back to algo trading. But yeah, if I ever make money on with Astral v3 and Python, I'll let you know, and I'll give you the money that you deserve. Like at some point, I was so interested in trading, and like I was looking at commodities, you know, like corn, rice, wheat, sugar, and so on, that I wanted, you know, to extract some, you know, weather data or like climate data, and you know, try to do some backtesting based on that, and that's like very interesting because you're actually using like real world data, not just, you know, historical price action, technical analysis, right? It's actually real data, and we can do that too. Like I was never successful with it, but it is to me like very interesting. And there are so many companies. Like I had a friend at work, like who told me like there are companies have cameras on every field and so on. They report everything, that they're actually making an analysis based on that. So I was like surprised. So like there's crazy ways to actually analyze the markets, and like this commodity example is like very interesting, and like I was like so shocked to hear that story. Because what we're doing right now is like purely technical, just historical prices. And like once we're done with the breakout, I was thinking that maybe we could, for example, start doing, adding some fundamental analysis. So we could, for example, extract Forex factory news data, look, how every release has, affected the price and so on. Another thing, fractals, or maybe even fractals, is an actual thing even in the market. Well, that's true. The markets somewhat move in fractals. But then again, the question is, how do you apply in trading, right? Knowing that something moves in fractals doesn't automatically mean that you can make money from it. And I also feel like the markets might move in fractals, but if you trade D1 charts, right, it's basically all fundamentally driven, right? It's pure supply demand. People want to buy something, invest something, whatever. But on the lower time frames, there's I believe that there is something that what we call noise in the market. So it's basically just some random price deviations going up and down. So I think that is like a major difference. Like the lower time frames to trade, that at a single price tick level, it is random, but on the higher level, it's not, right? So I think you need to apply different strategies, knowing this. COT data. It's a comment of traders. Yeah, funny. Recently, I've been talking with my colleague regarding the COT data. Never tried to work with it, so that's something I could also look at that in the future. And it's really good because you don't have the data, so we're it's really nice to have that data on the futures market. All right, finish my coffee. We're good to go. Or guys, I could also take a break from trading bot. Is there something you're interested in? Our trades are running. Of course, I want to finish trading bot ASAP because we need to trade more, of course. But I wonder what is our current project. Yeah, I guess we just focus on the breakouts and see what we can do. Maybe I'll take a break from S&P 500, look at the Dow Jones and see how the Dow Jones works. A few years ago, when I was trading, I was hoping I will only trade the Dow Jones, I will only trade the DE40, and I'll be the best trader just trading this one's asset. And there are traders who specialize just in one asset. I was like, okay, I just need to learn one thing very well. But over time, I felt more like, okay, why not just have 10 strategies on 10 different markets, diversify it, and it might be a bit better. Because now we look at the breakouts on Dow Jones. Look at that. All the bullish breakouts work 21, 22. Here they work sort of as well. But it looks much different. Martin, the 10 versus 100 SMA strategy on MT5 wasn't profitable. Which one do you mean? Do you mean the buy and hold strategy? Or do you mean one of my early videos that I've published? Because the trend following strategies. Let me just I don't have intermediate brokers here. I'm using the 10 SMA versus 200 SMA or 100, not sure now, on long-term strategies. So this is more for me like an investment signal. So this is something I'm using on the stock market. So when the market is trending up, I'm a long position, and I'm using that currently, to hold a long position on my index portfolio. So currently I'm long the Nasdaq and the Tech DAX. So this is what I'm currently trading. But again, because I don't want to pay swaps. Because by the way, guys, maybe I can answer a very important question that actually no one asked. But if you look at this, US Tech here has a negative long swap. So if you're like an investor, I do not recommend using margin accounts like MT5. I recommend using like actual brokers such as Interactive Brokers or any other brokers that are there, because you're not trading on margin. Here you would be paying every day a small fee to be holding a position. So for long-term positions, like very long terms that last for months and years, I recommend just open a normal brokerage account, and I trade with Interactive Brokers currently. Oh yeah, he said no, but and sell and crossover. Okay, let me change strategy. It was one of the early ones. Like I have also deployed, some cross strategies on D40. But over time, I just decided not to use them because for some reason I don't like it. I don't remember the exact reason now, because I'd have to check. The exact strategy of the video. Yes, Interactive Brokers has a Pi API. That's true, and I've actually integrated the API in my Python scripts. I haven't done algo trading bots, but I've done some bots that do market analysis. So there's all documentation, and I think if you're interested, we can also do maybe a workshop or a one-day crash course on Interactive Brokers. And there is also a library called IB InSync that is like a simplification of the official documentation from Interactive Brokers, and this one you can use to just start trading on Interactive Brokers. Oh yeah, it's a DAX strategy. So I've been trading that one. So what was the reason? I think I've disabled it because at that time I wanted to allocate my capital on the London breakout strategy. I think, yeah, that was the reason, and since then I have not touched it since. So I think it was a long time ago, because see that video on the D40, I think I made it was it 2 years ago or something. So yeah, so I was trading different strategy at that time. I wanted to allocate the capital somewhere else. So I guess no strategy then, but I can maybe revamp the strategy because I've completely forgotten what the backtest looked like. Yeah, maybe I should start working on a portfolio. And yeah, so at that time I didn't have the backtester, I didn't have all the tools that I have now. So I think right now we have much better tools to work with, and as you can see, yeah, I'm trying to have a bit more structure in my trading. So as you can see, yeah, right now we have this going on. So I've completely forgotten that I've made some strategies in the past, right? So yeah, that happens sometimes. Sometimes I find so many strategies, but I just don't write them down, stop trading them, and then I realize, oh wait, why don't I trade that or this or that? And yeah, but thanks for the reminder. Seems like you remember it more than me. Okay. So I guess, yeah, I still need to I think Interactive Brokers API is something that we can cover. And in the past, I also did Binance API, right? So I made some video on Binance API. So if you guys trade crypto, let me just quickly look at some past videos that I've published. And all of these videos I made, they need some type of update. So I was thinking, yeah, maybe I should start making videos, but streaming right now is the most fun for me. But let me find, oh, here it is. There it is. Right. So yeah, this is something on the Binance API. So I still need to do something on the Unitary Brokers API, and like once you implemented one or two APIs, you realize it's all the same. It's all like REST APIs or WebSockets. So like MT5 is special, right? Because it's just meant for MT5, but most like modern brokers, they offer REST APIs or WebSockets, and once you learn that, it's all the same thing. So I guess we can like open that topic as well. Okay, so let's get back to the S&P 500 or US 500. And look at the breakouts. Okay, so somehow like the problem backtesting is that sometimes you want to be in profit every month or every day. You want like a backtest that looks like straight as a line, but I think like that's not realistic, right? And like where's the line? Like the better backtest, the more suspicious it should be, right? Because if it's just like a straight line, either you found the holy grail, which is like unlikely, or you have over optimized your strategy. So you want to keep the strategy as simple as possible, but at the same time you want the strategy to look as nice as possible, and that's just so difficult. So I feel like when I look at the DE40 breakout trading bot, like I'm very happy with that because it's so simple. And because it's so simple, there's like less chance of cherry picking, right? Like cherry picking just the good trades. And so right now I still prefer the D40 over the general like SR analysis. Like filtering the hour by 21-22 seems fine to me, right? So we're just looking for breakouts at a specific hour, which should be still okay. And it's also okay like to just, for example, just focus on one breakout strategy, right? So here we're looking for long and short opportunities, but sometimes it's fine just to look for long opportunities or just short, right? Because most traders, right, when you like start trading and you like start getting a course on intraday trading, most of the time you find as many long and short opportunities, right? And what I realized is that sometimes just removing short, long and short, and just having a long portfolio is pretty good. And when it comes to, for example, like again index trading, and it's like a swing trade, and I know that the market's bullish and I can just go into a bullish swing trade, that's great. Or if I know that there's like a bear market, so I would just go into like a bearish trade, swing trade. So this is something like that I also take into consideration. So that's why, for example, when it's not like an intraday scalp, and it's like a swing trade lasts like days and weeks, I really like this SMA crossover filter, because in most cases it does work actually when you look at the like stock market direction. And right now, like I haven't coded anything because like I'm like in this what do you call it, like I've computed like a lot of things and I'm just like thinking what to improve, right? And I mean just thinking is already like a lot of the work already. So just sit down, you talk about trading, maybe you give me some ideas, and maybe we'll find something new. Because right now, like what's left to backtest, and maybe I'm just procrastinating right now, but yeah, let's just finish analyzing the breakout by relative SR range. I think that is something that we can also work with, because this is something that still needs to be work on. So here we have relative SR range, and I think here I can also use the shift one, and actually I don't need to shift anything because the period high and low I think is already shifted. So I will just need to convert to an integer, and then we need to check the group by based on the round integer value. So again, what is the SR range? So the SR range is the support and resistance distance. So if I scroll a bit closer, so here's a very nice example, for example. So what you see here is how do I clear all this stuff? Yeah, here like this. So here, for example, you see that this is the support, this is support, this is resistance. So here, this part is very high range, right? So this is high SR range. And here, this part is very narrow, right? You can see that, so this is low SR range. So when, for example, with a breakout with low range, maybe that might have some impact on the breakout. If the breakout's high, then probably we might not want to, but who knows? So we're going to test that. And here I'm going to create a new section. So I'm going to create a new section, and I'm going to backtest based on the SR range. So I'm going to the F4. I'm out of ideas how to name these variables. So I'm just going to use relative SR range. And I'm going to ignore hour for now. Right now, I'm not interested in the hour. I'm just going to have a look at this. So here I'm going to visualize the relative SR range, and I'm just going to have a look at the count breakouts like this. Hopefully that will work. And yeah, what I haven't done is I still need to run this section here because I wanted to change integer, but I need to take the whole value. I just took, the last second part here. Okay. So now we have, the analysis by the relative SR range. So here we see, for example, so the yellow one again is a bullish breakout, and the blue one is the bearish breakout. So if the relative support and resistance range is 4, for example, right? 4 seems to be the best range to actually, go into long position, but also here. And here's like the number of breakouts, right? So here we have 306 breakouts, we have 255. Here we have 54. So that is very interesting. So maybe what we can try instead is, because you see here we have like a breakout to the downside, and then but the market reverses, and then we have a breakout to the upside, and then the prices tends to go down. So potentially what we have here is we could create a strategy that, whenever we have a small breakout, it will we will go into the reverse direction. So this is maybe an idea that I have. Because what's interesting? Like the market is trending up most of the time, but here this part is just showing that, even though we have a breakout to the upside, it's more likely a fake out. This is what the data here implies. And I think here we don't have enough sample sizes to justify just going long or short. So when the relative SR range is 4, we can create just a buy strategy and just go into long position here. And interestingly, when the relative SR range is 4 here as well, which means that the volatility is just high. So generally, if the volatility is high, then the market tends to go up. That's what it seems to represent. So we have like two ideas and strategies that we can look at. Yeah, Martin, exactly. What about reverse only on failed trades? Let's do that. So instead of breakout trading, let's do like reversal trading using these breakout candles. And also maybe before we proceed with the backtest, how about we just also use the relative SR range, and also we add another dimension, which is the relative candle size, right? So this is now a very advanced analysis. And now this is interesting. And here I need to also include in the hover data also the relative candle size. And this is a part where like the analysis is getting very confusing and complicated, because we have two parameters, and then we can also add the hour, right? So now maybe I finally found some application where you can use machine learning, because multi-parameter optimizations are the biggest pain, especially when you just do it on the visual part. See that? This is huge pain. But you know what's interesting actually? No, I think this is not it, but yeah. So filtering by hour, let's ignore that for now. Relative candle size is enough. And we can ignore the hour here. And okay, so what do we have here? So here we have the failure when the relative candle size is equal to 1. But on the upside, relative candle size 0, 2, 4, etc. Here we have 129 breakouts. We have 108 breakouts. And then we have, yeah, candle size 5. So it almost looks like we had some, yeah, I almost think like this is like some news event or like a flash crash, whatever it is. Also, maybe if you use stop losses, maybe we could like mitigate the losses theoretically. But the most promising part here is when the relative SR range is 4, right? Because here we see like very small losses. Like when the relative size 8 and 6, very big, so we can almost disregard that. And here we have like 0, 1, 2, 3. So most bullish breakouts have had the best performance when the relative SR range is 4 and when the relative candle size is between 0 and 3. So that's what I'm thinking. Like this looks almost the most promising right now. I'm gonna try that. So now we're going into like a long only setup, and I'm actually gonna copy. I'm gonna copy this cell, or I'm just gonna create a new cell, copy that, so we don't lose the previous logic. I think I should have made a new notebook, but let's try like this. So what we're going to do now is we're just going to, just filter where the relative SR range is 4 and where the relative candle size is between 0 and 4, or like less than 4 or less than equal to 3. And now we're just going to do buy positions. So breakout type is 1, which is bullish, and relative SR range is equal to 4, and relative candle size is in 0, 1, 2, and 3. I think that should be working. So let's see. And we do have a profit backtest, but still not nice enough. Because we see that we mostly have a profit just in a single, in a single period here, but the rest of it looks quite bad. So yeah, I think the main problem of this strategy is that we are working just with the highs and lows, right? So maybe we need to, go a step back and maybe look more into, these ranges. So for example, I might have taken this breakout actually, right? So this is a very nice low and I might have taken this breakout. So maybe let's increase the period, SR period to 5. So weekly highs and lows is something that we could be experimenting with. So maybe like, the longer the support resistance, the more significant it might be. And when it actually breaks out, and it breaks out with a lot of momentum, this could potentially be, a better setup. So now you see that I'm actually, increase the period. And let's have a look at the new analysis. Okay. So again, we see huge candles during the hour 20 and during the hour 22. And 21 is more or less, sorry. It doesn't do much. So here we have, again, new data. So the prices just tend to rise at 20 and 22. Look at this analysis. Yeah, so now I filtered, I think, the number of breakouts because now I have, a structure high and low, but I don't think that would change like that much. I mean, as you can see, the trades now are much longer, I would say. Oh, now it's just confusing. All right. I have a great idea, guys. As you see, I'm struggling a bit because yeah, we've been working for it for almost 3 hours now. I feel like maybe taking a break and coming with a fresh mind might be helpful. So I think we've done a good job anyways, right? So we've done some profitable backtests and it still needs some work. But maybe tomorrow I can continue on this. But I still have some time, and I think we can still work on something else. So, and I think we can maybe start with a simple concept. And this is also like price action based because today's topic, we're supposed to trade price action patterns and so on. So I was thinking maybe we can just try to work with some retracement strategy, right? So. Yeah, new topic. Let me just explain what we're gonna do now, and we'll come back to this support resistance analysis, maybe tomorrow or next week. We found ways that doesn't work, so we are better than yesterday. Yeah, also true. Actually, checking that something doesn't work is also fine. But I do believe, the main issue with this is like actually finding reliable breakouts, right? And we've tried filtering by hour, by ranges, by candle size, and many more. Oh, and one thing I haven't done yet is also candle density, right? Oh no, I have another, like, I would say, genius idea, but it will require, again, a lot of work. But you know what? Let's also compute the last possible thing that I want to do. And I wanted to do like something called candle density, which is also a concept. And let me just explain. So again, we're working with ranges, right? So let me draw two examples. And again, this is like a horizontal pattern to trade ranges. So for example, you have price action that's like this, and then it goes like this. So you see that for the most part, the range only fills this part, which is for example like 30% of the range, right? So the candle density of this 30%. But if, for example, the price moves like this almost all the time, right? So the density here is 100% almost. So this is very sad. So I think another idea. Let's work on candle densities. And I'm just gonna make a copy now because it's all getting too confusing. So I'm just, a fresh start always helps, to keep it simple. And I'm just going to delete the things I don't need. So I'm going to add that, and I'm going to analyze the candle density. And I think that shouldn't be that difficult. So I'm just going to, here we have the check breakout and so on. So what we need is we need to compute the candle density here. And a way to actually compute the candle density is actually just to take the range of the candle, right? So I'm just gonna compute it, and I hopefully you guys will understand what I mean by that. So basically, to get the area, it's basically like taking the area. So we're going. So for example, this is the range, right? So what is the area of that range? The area of that range is basically the time. This is the time axis, right? Or num candles. And this is on the right side, the range, right? So the formula to get the area of this entire thing is the range times num candles. So I think we could do something like that. So this is the area, or let me just do, oh no. So the area is equal to range times num candles. Hi Kwan, nice to have you back. And the density of the candle is like if we draw like some little candles, right? So these are like candlesticks like inside that range. So it's basically how much they're occupying that thing, including the wicks. So so then if we like take the area of the candles, so this is my idea, the area of the candles, so let me call it candles, hopefully you can see it, whoops, is basically the sum of the candle range of all candles that are in this, right? So as a result, the candle density that I'm trying to compute is equal to just the area of the candles divided by the total area. So this is what I'm trying to achieve with this. And so the fuller the candle density, the denser the range, and when it breaks out, it actually means that it's like saying bye-bye range, I'm out, I'm going away. So what if we try to use this? Tibu0, are you using a fixed range or are you range dependent of the volatility ATR? I'm using like time-wise, I'm using a fixed range. So I'm just computing X amount of candles. In this case, I'm using like 24, like the weekly candles, right? 24 times 5. And for the ATR, I'm using the same range, right? So it's always anchored to the same period. Okay, so I will just delete all the previous things here because this is now a new file, and we go into the candle density. So basically it's the sum of the ranges, which is the area, and the total area is basically SR period times the current candle range. So I can actually compute it right here. So here I can do compute total SR range area compute total SR range area and candle range area. So OHLC SR range area. Now finally we can do some school mathematics. Is equal to OHLC. We take the current SR range is here, so actually I need to compute all the values, you know, down here. So we take the, should we actually we don't need to compute in the ATR because it will be divided anyways. So we just take the SR range multiplied by the period. So this is the area. And then candlestick area. The candlestick area is equal to, and we take the OHLC, we take the rolling, we take our SR period again, and then oh yeah, we have to take the range values and we have to sum them up. So we use the sum. And then what we can do is candle stick, or just candle density. Let's just call it candle. It's shorter, and you guys know. So candle density is equal to, and we just take the candle area divided by the total area, and as a result, we will get the candle density. Oh, I need to start everything again. Okay, so what we can see here now is that maybe I will use a short period, so let's do like a daily period. Because the shorter time frame, the higher density you can get. So if the density is, let's say, 77%, it means it's almost full, right? So it's basically all this area is filled with the candles almost. So what I'm going to do is I'm going to categorize each density value from 0, 1, 2, 3. So based on that, so I'm going to round it to 1 decimal value. So I'm going to use round to 1 decimal value. And now if we check the charts here, here we see that it's rounded. See that? And now we are going down here and we are going to analyze the breakouts based on the candle density and then potentially like relative candle size. So as you guys see, not every idea has to be profitable, but at least the research and that can be quite interesting. So don't think about just making money, but think about just doing the research, and the ideas will come on their own. Because right now I'm like really motivated. Like after coffee first, and then the candle density was an idea I wanted to do, and like I was thinking I was going to do it like maybe over the weekend. But good thing that yeah, you guys keep me motivated, so we can just keep working on that. So candle density, here's the breakout DF2. So here we group by the breakout type and candle density. And here we do it like that. Oh, and I forgot to close this here. Okay. So that is very interesting. Yeah, let me delete this because now we're just working with the densities of the candles, and then we can just keep this backtester here in case you want to run some backtests. So I was assuming, the denser the candles, the more reliable the breakouts, but that also might not be the case, right? So what I want is a high density, and I'm also going to do hover data is equal to count breakouts. So I want to measure the number of breakouts. So most of the breakouts, they happen when the candle density is low. And what we can see here is that here we have 500 breakouts when the candle density is 0.3. And then here we have 59, 500, 59. Oh, hover data. Oops. Here this shows the hover data. And here we have number of breakouts. Here are 500 breakouts, 200 breakouts, and 59 breakouts. So that's interesting. It seems like, yeah, the candle density might not help us here that much, but what we can try differently again is maybe even lower the time interval. Let's look at very short consolidations on the intraday time frame. Maybe it's also everything time frame dependent, right? So now I'm just doing the candle density based on a 4-hour interval. And let's see how it works again. Okay, this is strange because the candle density should be between 0 and 1. And now we have a candle density that's even in the ranges of 20. Which means that the candles that we have are greater than the actual area. And that might be true because, if the candle, the first one and last one, are peaking like outside of that range, which actually shouldn't happen, but it can, because it's shifted, then that might be the cause. And maybe if I try shifting the values. So again, guys, it might be very confusing to you, but once I figured it out myself, I will then make like a simple backtest that you guys can later understand. But right now I'm just experimenting with different values to see what works and what doesn't. So here, because the period high and low is shifted by 2, maybe I should also shift these values by 2. And maybe I'll get better results. And I still get So the candle area is greater than the candle density. Oh, that's right. Here the SR range area is lower than the candle area, and that is and that shouldn't be, because the range is always, no, it's not always. Let's have a look at drawing. Range time num candles is a sum of the candle ranges. Oh, I know the problem now. Guys, the problem is that, and that's why it's getting confusing. I'm using the close prices for the range calculation, but I'm using the high and low prices for the candle ranges. So instead I should compute the body range instead, or rewrite again the highs and lows based on the high and low prices. So here it's close rounded, as you can see, but I can again rewrite it to high. And let's just use high. I use rounded prices, but I think I can now just use highs and lows. And now hopefully I should have values in the decimal places. And it works. So now we have sizes between 0 and 1. Okay, so another finding. So whenever our candle density is between 0 and 5 and 0 and 7, and with a bullish breakout, it tends to go down. But when the candle density is below, is 0.4 and below, it seems to perform better. Very interesting. And let's also add the relative breakout candle size into the analysis. And maybe that could work. So I think we're onto something. Okay, so when the relative, or actually when the candle density is 0.3, it seems like even breakouts. And the higher density we go, the more interesting it gets. Like we see that that we can actually make our best trading opportunities as a reverse trade. So Martin, back to your idea. So you propose that, if there's a breakout, let's just, go reverse. And I think we can start with that. So it's size 2, size 0, size 0, size 2. And again, actually, let me just try to again do like a 24-hour SR range analysis, because I think 4 candles are not that significant. And now we are here. So we're measuring the support and resistance in a 24-hour time frame. And I think Because we have so many parameters, maybe you should start making a scatter plot. So I will do a px.scatter. We do add this data frame. So x is going to be our candle density. So I'm going to make like a 3-dimensional analysis, putting x on candle density, y is our percentage gain, the color of this will be the candle size. Or we actually need the let's just start like this. So just our scatter plot. See what you have here. I think I can separate it then in two categories. So if you want to check the buy and sell, we can separate that. So I'm now instead just going to separate it by a relative candle size. And here I'm gonna just investigate breakout type is equal to 1. So here title buy or bullish breakouts, and then I'm going to check the bearish breakouts. And here the breakout type is -1. Let's see how it works. Tibus asked, would you think that you might have your stop loss too close, or by looking into it you know that the breakout is not effective? Currently, yeah, so definitely if the stop loss too close, I think that affects the profitability a lot. But the current analysis I'm doing is if I'm just computing if there's any edge, you know, in the strategy. So before I even consider placing stop losses and take profits, I want to make sure, you know, that the subsequent candle, you know, after breakout has some meaning. That, you know, I see. In other words, I'm trying to look if there's an edge in like buy or sell positions. And okay, so here we have the separation by candle density using highs and lows over a 24-hour period. Or what if I just do an 8-hour period by session? Should be enough for intraday breakouts. Okay, and the scatter plots are actually very nice in terms of like a single scatter plot, like just shows me a profitable opportunity simply based on, you know, a single you know, value. So for example, when candle density is 0.5 and relative candle size is 1, we have, and it's like a bullish breakout, we should go short. This is what like this app is like suggesting to do. And for example here, we can select, okay, if we have like a bearish breakout, so now we're looking for reversal trades. And I think I can also make a line chart, because a line chart will also show you. This looks interesting. So here we can see relative candle sizes, right? Relative candle sizes, you know, so if the relative candle size is just 1, we see that if the relative candle size is 1 and our candle density is between 0.4 and 0.6, we have a profitable opportunity. If we like add relative candle size is 2, it seems not to work. And if we add 0, it also seems to work. So I think we can use relative candle size 0 and 1 and also go short on bullish breakouts when the candle density is between 0.4 and 0.6, right? Because everything in this area is profitable if we go short. So this is actually what we're looking for. And so here we have the bearish breakout, and we can try to use a similar methodology. So we see that for bearish breakouts, if we have a bearish breakout and then, you know, price, the candle density is 0.3 above, almost all these, you know, trades here go in reverse. Yes, we short on close of the breakout candle, that's correct. So I think we found potential potential opportunities to actually go into reverse. So I think what it means is that when the volatility is low or the candle size is low, it means that we can actually hope that, you know, the market will actually reverse, because it holds true for 0 and 1. But when we go to higher candle ranges and we can try to look, you know, or we can just try to look at everything again and try to find some patterns. Again, I like separating bullish and bearish opportunities, right? So here we have relative candle size 1, 0, and 3, and 2 seems to be, you know, not profitable anymore. But most of these lines here indicate we should go short between 0, 4, and 5. So I think that is very interesting. I'm like quite disappointed because, you know, they teach you, like when you learn trading, they teach you, oh, you should like look for like a range, right? Look for a range, and then yeah, look for some consolidation and then breakout, boom, free money. I think the data implies that it's not as easy, right? It's not as easy because right now there's some filtering, and overall classical breakouts don't work that way. Maybe they used to be, or maybe they work on different markets, but on the S&P 500 it's actually difficult to find these breakouts. That's what I'm trying to say. So I'm just going to try to write a backtest that is going to take input relative candle size 0 and 1, and the range is between 0 and 4 and 0.6, and see what happens. And I'm just going for, you know, bullish breakout. So I need a bullish breakout. Relative SR range is between, or candle density now. I'm working with candle density. Candle density is less than equal to 0.6 and is greater or equal to 0.4. And the relative candle size is between 0 and 1. And then we buy, we hold the trade for 1 hour, and then we close it and see what happens. Oh, and when that happens, we want to sell. Okay, so this seems to work very nicely. This not so much. Theo said, I'm trading breakout, and you are right, it does not work on everything. The easiest I found is GJPY is JPY due to their nature of strong trend. Yes. Maybe we can try it on USD JPY actually, as you've mentioned. So we can look at, you know, other markets where breakouts tend to be, you know, like stronger, or maybe like it works on, you know, we can try Bitcoin or some individual stocks. Yeah, we got back to break even. You know, it's quite interesting. Like, yeah, you're happy, you make money, and then one day it just goes down straight like a truck. So let's have a look at that. We also see, I see some symmetry, guys. See that? When the market's going down, the strategy is working. So maybe you should use some trend filters. See that? When the market is going down, then we go short, and we have like bullish breakouts. It's going down, but when the market is going up, it's going down. I'm very lucky. You know, I have these charts like right next to each other. So how about we test also the trend filter? So now we can finally also, you know, also try to work with the trend filters. So let's add another condition. And data trend that we computed. Where's the trend? The trend is either uptrend or downtrend. So we are trading with a trend now. So we're trading against a breakout, but with a trend. So we're getting somewhere, I hope. Let's run the backtest again. Oh, and the indent is bad. I know, I'm just gonna do like this. Or I should write the end here. We are basically trading liquidity grab. Yeah, seems like it. What does SMC mean, Martin? Okay, now we did that, and I think we lowered the losses quite a lot. Because, yeah, now the market, we shouldn't be trading as much here. And we are trading mainly in the uptrend. And then, how about when the market's trending up? Because now we're not trading that much here, right? So there are not like many opportunities. Or maybe I can just increase the period here, like period 100, whatever I can do. Like this type of crossover, 100 and 200. Apply a stronger filter. Or actually just, you know, check if price is above the SMA 200. It doesn't change that much. So we make money in a market that's trending down. Actually, let me just use the SMA 200. So if the open price is above SMA 200 in an uptrend, else a downtrend. We don't use SMA 10 in this case. Just use SMA 200. And now let's add a bullish condition. So here, this is bullish breakouts. Had this. And let's have a look at setups where we have the bearish breakouts. So where bearish breakouts go up. Okay, not much is working here except for relative size 0. So let's try this for the bearish breakouts and do the reverse here. And now we're just playing around. So let's see how it goes. So 0.3 until 0.6. And relative size is just 0 here. And then we want to enter into a buy position. Key error breakout type. Let me just run everything again. Now we seem to have a problem here. I think I broke something and I don't know where it's coming from. Oh, because I deleted the indicator SMA 10, which is no longer here. Let's try this again. Well, not much of an improvement here. Well, at least, yeah, we figured out the candle density, I guess. We can leave it at that. Okay guys, so I guess today's stream was not that successful, but at least we learned something. And I think next time what we're going to do is we're going to maybe take that concept, but we're going to apply a different method on identifying price action patterns. And what I want to do is, like, now we use every single candle for the computation, but sometimes you see in price action like a simplification where we're just using highs and lows, right? So for example, this is a low, this is a low, this is a low, this is a high, this is a high, and this is whatever because it's not closed yet. So we're actually, instead of candlesticks, we're going to convert the candlestick price action into just lows and highs, and that way maybe we can try to compute the support and resistances or other price action patterns, right? Or maybe in the future, like as part of that, if we can represent highs and lows, we can also do something like how people tend to draw the highs and lows here. So this is a high, this is a low, this is another high, this is another low. So I think maybe we need a different way to simplify the OHSC candles, because we're taking every OHSC into consideration. So let's try to do work with this, and I think we might use a zigzag indicator for a next stream. So here's an Investopedia, here's a zigzag indicator. So we're gonna compute the zigzag indicator in Python, and then we're gonna try to work with this, something like that. I didn't fail the test, I just found 100 ways to do it wrong. Yeah, that's a great quote. Okay, so let me schedule the topic for next stream. So yeah, yesterday I was not available, but I'm glad that today. So tomorrow is the 10th October 2024 on Thursday. Again, I'll be streaming at the same time, 14:00 GMT +2, and I'm going to again price action patterns using high-low zigzag indicator, or different indicators that are able to identify highs and lows. So this is the topic for tomorrow, and right now I'm gonna schedule a new stream. And the topic, I'm just writing everything down. So it's the topic will be price action pattern recognition Python. I'm just gonna write like this. All right, and I guess it's scheduled now. Right, and it was scheduled tomorrow at 2 p.m. GMT plus 2. Amazing, so it's scheduled now, so I'm going to send the link to Discord now. Okay. So great, I have scheduled the next stream. And now I guess, yeah. All right, everyone. So yeah, so thank you everyone for joining the live stream. So I'm very happy, you know, to have this much engagement today. Thank you again, you know, for the donations and, you know, for all the you know, membership subscriptions. So that means a lot to me. And as I said, we will be seeing each other tomorrow again. Anything else? I would say, yeah, trading bots are still being developed. Right, we're still working on that. But yeah, so BTC is still going on. This is still being tested. This is already trading. We'll see how it goes, and yeah, we'll have an S&P fund trade, you know, coming up in November. So have a great day, guys, and yeah, see you tomorrow. Bye bye.